Hello, this is Professor Grant Thrall welcoming you to Market Analysis of Urban Built Environments. Module 1, Why Market Analysis? Cap rates. You can find cap rates at www.irr.com. Here are two examples of cap rates for Atlanta, Georgia and Las Vegas, Nevada. This is for third quarter 2009. Discount rate and net present value. Before the net present value is calculated, the market analyst must estimate the discount rate. Net present value is inversely related to risk. Risk varies with location, terms of lease, composition of the tenants, and a myriad of other factors. The greater is the risk, the greater must be the return to offset that risk. An example of a low-risk rental is renting commercial property to a government agency. Example of a high risk is a property rented to a family-owned and family-managed single-unit restaurant. The high-risk investment is considered feasible only if there is a high discount rate that yields a positive net present value. Investment value versus market value. Investment value, IV, arises from the expectations of the stakeholder investor. Expectations are based upon perception of risk, intangibles, and opportunity cost. Market value is the price that the asset will transact between a willing seller and a willing buyer within a specific geographic submarket and time frame. Investment value is dependent upon the investors and prospective sellers' expectations. This is what we know as the going in price and the going out price. Test for market analysis. Does the analysis of current demand and supply justify the investment? Does the analysis of future demand and supply justify the investment? Does the investment value exceed the investment value of alternative projects, namely the opportunity cost? Does the investment value equal or exceed the expectations of the stakeholders? Market feasibility. Market feasibility combines location feasibility, geographic analysis, market feasibility, and financial feasibility. These combined give rise to the decision go or not go, or go with modifications. Stepping back after the analysis has been done. Does the analysis make sense? An example comes from Escher, 1961, a famous drawing titled Waterfall, and seeing how the water falls, cascades, and then rises and falls is, we know as observers, when we look at the whole, it's not feasible. But when we look at each individual part, it makes sense. Stepping back, while each one of our individual parts of the analysis might have made sense, the whole, when evaluated from the totality, just may not make sense. We must reconsider all the weights of the factors that went into the decision. We must reevaluate if any factors should be included and had not been included. Then we redo the analysis with newly identified and newly weighted factors, and then step back again. Does the analysis make sense? This information is based upon chapters 1 and 2 of Grant Thrall, Business Geography and New Real Estate Market Analysis, published by Oxford University Press, 2002. This will be continued in Module 2.